Hey everyone, welcome back to another Sensible Sundays. And I am Des Joe with DR Real Estate and Staging. And I have with me on today, which a lot of you guys already know her, but however, her name is Karina Calhoun with War Cry Consulting. And she is one of my credit coaches. And she does a really great job. And so today, what we are discussing, if you are someone that is very, very interested in restoring their credit, building their credit, maintaining their credit, you definitely want to watch this because we're going to be discussing the new credit reporting guidelines. And also, Corinne is going to touch a little bit on the stimulus package as it relates to what we're going through right now, COVID. So definitely, you don't want to stop watching. You want to get this information. All right. And so we're at Sensible Sundays. And what we are doing here is we are empowering home buyers, home sellers, and investors to be well-informed consumers from the start of their real estate journey. That is what we're about. And we just want to bring information out here to make you better aware of what you're getting into when you are looking to purchase a home, sell a home, or if you're getting into investing. And so we're going to go ahead and we're going to let Karina take it from here so that we can get into this new credit reporting guidelines.
Hey guys, thank you, Des, for having me on yet again, Sensible Sundays. I absolutely love this platform. I love what you're doing with the information. I love how you are empowering us. Oh my goodness, I love it. So guys, this new credit reporting model that has dropped. So listen, I'm not coming to beat anybody up. I am not. I promise I'm not. But I'm the auntie that's going to give it to you straight. Okay? I'm the one that's going to let you know, listen, get it together. So in this new credit reporting model, you're going to see possibly by the end of the year, well, let me rephrase that. Now that we're in COVID, you may not see it as quickly. We're not really sure how that's going to work out. But you're going to see eventually, everything comes to a pass eventually. You're going to see a drop in your credit score if you have a ton of late payments. Because what they're doing what I was so afraid of for so many years with this big credit repair boom that we've gone into. They're actually now counting in, they're weighing in the late payments that you've had. So, if you've had late payments and they were really true late payments, they're going to go back about 2 years to weigh that into your score. Okay. Now, if you have worked hard to get your credit score up, you have gone to a credit repair company and they have wiped out, a lot of the different negative accounts that you've had. They've disputed it. They've done things of that nature. This could potentially hurt you. I'm not going to say that it's going to hurt you, but I just want to come from a realistic perspective. Okay. Right. This is going to hurt. And the credit companies, credit agencies, they already know. They are very well aware of this. Very well aware. But what they're doing, they're becoming smarter in how they look at our credit. They're looking at it from a different angle, which is what I've tried to explain for so long now. As an underwriter, I looked at so many things beyond a credit score. The credit score was that initial benchmark. If you meet this criteria, then yes, we can look at your file. We can go ahead and say, yes, you may qualify. But then as that underwriter, because I am looking at the risk for that company, I'm then going to dig into every single solitary thing I can as far as your financial history is concerned. So what this model is doing, it's helping. It's helping. It is not for the consumer. It is not for the betterment of the consumer, but it is for the creditor. It is for the lender. They're going to be looking at the balances, the account balances how many late payments you've had, how many missed payments you've had, and they're estimating that this is going to affect about 40 million consumers.
Wow, that's a lot.
And they're thinking it's going to be about a 20-point drop. Okay, so it is not just enough at this point in the game to simply get credit repair and let it go.
Right.
We actually have to work towards building, maintain. We have to obtain, maintain, and sustain our credit profile.
Yeah, that's something I definitely tell my clients. We're not just going to stick you in this program, okay? Just to repair just enough that you need to repair to get into this house. If that's what you're about and that's what you're trying to do, let's not even go there. Let's not have this relationship where I'm assisting you, because
Absolutely.
It's important to repair, restore, rebuild, right? And maintain. Okay, there's no reason where you would learn how to restore and rebuild and not maintain it. Mm-hmm. Now, there's certain circumstances that are just beyond your control, right, where you know better, but you just can't do better. That I understand, but really think about maintaining.
Right? Absolutely. And I understand that while we're in these times of COVID, this is a new time. Listen, I want to just throw this in there. Let's stop saying these uncertain times. Let's stop saying these scary times. Let's stop saying all of these things that create this negative thought in our, because I also do mind reframing. Okay. That is a part of my coaching. So we have to stop feeding the negativity.
That's right.
These are unprecedented times. We've never been here before.
That's right.
So guess what that allows you to do? That allows you to create.
Yes.
That allows you to go be great.
That's right.
So it's not scary times. It's not uncertain times. It's not strange times. I was using strange times at first, and I was unctioned. Stop doing that.
Right.
It is unprecedented.
Yeah.
But unprecedented doesn't mean you stop.
Right.
Okay, so in these unprecedented times, let's continue to move forward. I know it probably seems like, well, Karina, I feel like the bad kid that's already been punished and is being punished again because you're fussing because it's COVID-19 and we're already dealing with stress. I'm just trying to put this out there, okay? Because once this is all said and done, we still have to go back to all of this. Which then takes me to, I want to talk just a little bit now with the new scoring model. I do want to say this, that most mortgage lenders are probably not going to go to this. Okay. Most lenders, most mortgage industry lenders use the same models. Okay. So this is not something that I would say you have to be concerned with if you're going to purchase a house in 6 months. Unless we begin to see a trend where they do go to this. However, just know that this is out there.
Right.
Know that this is not your friend. Okay.
Call it preparation. Like this is something that could help you be prepared. And
you never know if they will move towards it. You never know. Mm-hmm. Okay. So you, as Dad said, you want to be prepared. Now, the flip side of this, if you've already got, really good credit, this is probably going to be a boost for you. Okay. So that's really all that I wanted to talk about as far as the new credit model. The other thing that I wanted to just briefly talk about is the stimulus package. So one of the things that President Trump enacted in the stimulus package is that your student loans. Okay, now here I go being auntie again. I'm sorry, guys.
You gotta call her Auntie KK from now on. Auntie KK, go ahead.
Listen, so he has made it where you don't have to make a student loan payment for 6 months until September. If you have a federal student loan, now if it's private, you're on your own, okay? And not very many people have those, but there are some. But if it's a federal back student loan, you don't have to make that payment for 6 months. If you were already delinquent, they have to stop all collections. They have to stop all garnishments. They have to stop, if they were going to take your refund, they have to stop that. And the key, see, this is amazing. Let me tell you. Use this to your benefit, guys. They have to show that for these 6 months, it has to show as if you made a payment on time.
Get out of here.
Use this to your benefit. Yes, ma'am. They have to show that it was as if you made a payment for these 6 months on time.
Wow.
So listen to your auntie now. Listen to
Okay, Auntie KK.
Listen, you have to look at some of the situations, this unprecedented times. As Dad said, we can create. You now have an opportunity. If you were delinquent, then you're going to get, some of us are going to get $1,200. Some of us are going to get $2,400. Listen, I was calculating, I have somebody to owe me some money. Okay.
Okay.
I'm just going to say that. They're going to get $1,200 for them, $1,200 for their spouse, for their boyfriend that they live with, and then $1,500 for their kids.
Wow.
Run me my money. So with that being said, use this time. I know I'm crazy.
Hey, you gotta be you. You gotta put it out there, otherwise you might not get it.
Yes.
We being real here. You gonna get the real here.
Exactly.
Yeah.
Use this time to rebuild. Okay, I know many are not going to work. So Karina, how is this really going to help me? It's going to help you if you were behind. If you got $20, start paying on that student loan if you were in default, if you were delinquent. They're not going to bother you for 6 months. Then after that, we don't know what's going to happen, but you may be eligible for some type of forbearance. You never know.
Right.
So that's really all that I had, Des. I just wanted to talk about those 2 points because I think that is, it's imperative that we have this information. Oh, and another thing, the stimulus package, the relief for small business owners, it's not for everybody. You basically have to go and get a loan from the SBA. And if you can't qualify because your credit is not all that great, it's not going to help you.
Wow. Okay. Wow.
There are criteria to it. So look into it. If it just depends. It depends.
Hey, and you know what? Go ahead.
It is imperative that we build up our credit because this is a catastrophe. Mm-hmm. I doubt very seriously that the SBA is going to relax their regulations. They may, but if you think about it, if you're already in a situation where your business is folding and then you go to the SBA and your credit is bad, those are two things that they're going to be like, we don't want none.
Right. Because I guess they look at it as, okay, I know we have this big catastrophe going on, but that just lets me know as a business owner, you don't prepare. Why? Because your credit is now tore up. You didn't plan ahead. You didn't put anything aside for a little bit, just for a little bit to, sustain. So maybe they're looking at it like that, so I'm not going to say that's not fair, but maybe that's how they're looking at it. You got to think they're loaning you this money. So they're going to want to know that you're someone that can prepare, that you're someone that's more than likely going to be able to pay it back.
And keep in mind, SBA loans, they have credit criteria.
Right.
And, again, I'm not saying that this is definitive because I haven't heard any chatter from the SBA as far as are they going to do anything any different from what they've been doing. But if they go by their normal, regular routine, that is the case.
Right.
Because a lot of people have gotten excited and said, oh, he's got this stimulus, a part of the stimulus package is for small business owners. There's criteria.
Read the small lines, guys. Read the
just
fine
because
lines.
you have, exactly. Just because you have an LLC does not mean you qualify for that stimulus package relief. Okay. Right. Then the flip side, for those of you that know, Auntie Karina here again, if your business is not legitimate, there you go.
Yeah. And is it going to be like business credit reporting, or are they looking at your personal credit report? Do you know?
The SBA, they want to see your personal credit.
Personal credit. Okay.
There's a lot of factors included in it. How much revenue did you have? How long had you been in business?
Right.
And you can't have no more than 500 employees, of course. Now, there is a piece in the stimulus package that talks about if you are a gig worker or you're a freelancer, then you may have, that is what they call extended unemployment or extended employment benefits, where, typically you can't file for unemployment benefits if you just work gigs and things like that. You were freelancer. Right. But they actually have that in the stimulus package.
Okay. All right. Well, I guess they're trying. They're trying to consider everyone.
They really are.
That's a good thing. I was going to mention earlier that I heard from one of my lenders, and there's some lenders out here that are no longer going to be approving or pre-approving anyone with credit scores under 640. Now, I'm not saying that's all lenders. I'm just saying, some. So guys, let's really take a look at things. Now we have some time on our hands to kind of really look at some things, which, hey, look at it as a blessing.
Yeah.
I know there's uncertainty, but now you can take the time with your family, your friends, all your loved ones, and really take a look at what is going on with you personally.
Right.
And come up with a plan, a plan to get on a better foot.
Exactly. And I think that's the key. Really, pivot.
Yeah.
That, I worked in corporate America, and I had a leader that used that term religiously, and I began to just like almost despise it. But it makes so much sense, because we have to be able to pivot on a dime.
Yeah.
That's how quickly we have to be able to do it, and how effortlessly we have to be able to do it. So, we're not beating anyone up, but, and I will say this, I don't like the credit system. I don't like the credit reporting system. I feel like it creates an appearance of someone, you are at this level on this score,
right?
Based on, and it could be things out of your control, but and it could just be that you have bad behaviors, bad spending, bad credit behaviors. But at any rate, I don't like it. I have a love-hate relationship with it. And so in my mind, in a small piece, I do say it's not fair. But at the end of the day, that's why Des and I go so hard, because we want to make it fair.
Right.
We want to make it fair in that we give you as much information as possible.
Preparation, guys. Preparation.
Yeah, absolutely. That's all I have, Des. Thank you.
Well, that was definitely some great information. Thank you so much for being on again. I really appreciate it. And, guys, I really hope this made some sense to you. I really, really do. And as always, I want you guys to be inspired and act on your inspiration. All right? Bye. Until next time.
Bye, guys.